Welcome to the Probate Nation. My name is Richard Ruddy and I'm your host this evening. Probate is a process to transfer the title or ownership of probate assets to the beneficiaries of a deceased person. Not all assets are probate assets, and there are different types of probate, some simple, others more complicated. Like a journey on a slow-moving steam engine train, probate of an estate has a beginning, several stops along the way, and at the end of the trip, the balance of probate assets remaining are delivered to the decedent's beneficiaries. Some probate train rides are short, while other probates seem to never end. We have done several shows on how to deal with different types of assets in probate. Today we are focusing on life insurance, on the life of the loved one who has passed away. Topics to be discussed include how to find out if a policy exists, who owns the policy, how to make a claim, why claims are denied, taxation of insurance proceeds, and much more. We are fortunate to have two experienced life insurance agents with us today to break all of this down for us. Ken Fahmy is the owner of Fahmy & Associates, an independent insurance brokerage agency located in Falls Church, Virginia, through which he has worked as an independent insurance agent for many years. He graduated from McDaniel College and has earned numerous industry designations, including Chartered Life Underwriter, Chartered Financial Consultant, and Certified Financial Planner. Washingtonian Magazine and the Northern Virginia Magazine have cited Ken numerous times as a top financial professional. Michael Feinberg, a lifelong resident of Northern Virginia, has been in the life insurance industry since graduating from McIntyre School of Commerce and UVA in 1995. His experience includes 15 years running his own independent insurance advisory firm, during which time he earned the industry designation of Chartered Financial Consultant. Since 2013, he has been the director of the Life and Health Insurance Department of McLean Insurance Agency in Loudoun County. Please welcome Ken Fahmy and Michael Feinberg.
Thank you.
Thank you.
Guys, thanks for joining us today.
My pleasure.
Without a doubt, this is a challenging area sometimes. So, Ken, tell us a little bit about what is life insurance.
Well, life insurance is simply a contract with an insurance company. And in exchange for a payment known as a premium, the life insurance company will pay out a sum of money to the beneficiaries in the event that the insured were to die. So it's a pretty straightforward contract.
Okay. Good. Now, Michael, how can someone, when someone passes away, you go to their house and you begin to try to figure out what assets they have, and how does somebody find out if somebody actually has life insurance?
Well, there are a few ways. Obviously, one of the ways that we would suggest is hopefully there is a safe deposit box or a file at home that would have information about either the policies themselves or the location of where the policies are. That would be the most simple and helpful way. Sometimes that's not possible. Great records weren't kept or otherwise. And there are a few other research-based ways where you can learn more about that. One would be to contact the former employer or employers of the decedent. There are group plans, benefits that they may have been eligible for to have that wouldn't be readily available on their desk, for instance. Another way would be to review their financial records, checking accounts, credit card statements for any type of billing statements or otherwise that are there for the last 12 months. And probably also a good idea to keep track of incoming mail for the 12 months beyond the date of death to see if any future statements or bills are coming in.
Okay, those sound like really smart ways, but you'll be doing that a lot of times anyway as you begin to take over. But is there any online database search engines that folks could use?
Yes, both through the state insurance departments. Not all state insurance departments, but many have databases showing existing policies and insurance companies that hold insurance policies on decedents. There are also some for-pay sites, including the Medical Information Bureau, which is involved in the underwriting of life insurance policies, kind of a clearinghouse for people who have applied for life insurance since 1996. So if they've applied for life insurance in the last 20 years, there'd be a record of it. Not necessarily about whether a policy had been taken out or approved or denied, but it certainly provides a good starting point to do some further research.
So for our viewers, we have actually posted a couple of those website links on the screen, and we'll have those also posted on the Probate Nation website. So Ken, one of the big things we need to find out right away, if there is a policy, is who owns it. Okay. Who can actually own a policy?
Well, typically you would find that either an individual or a business or a trust would own a policy.
Okay.
However, in order to own the policy, you'd need to have, they would need to have what's called an insurable interest, meaning they need to justify the need for the insurance. Without justification for the need, an insurance company would most likely be reluctant to allow them to purchase that policy.
Sure. Now, how does an executor find out, though, then who owns the policy?
Well, if an executor is necessary to find out who owns the policy, what would happen is the executor would need to go to the Virginia State Court and be appointed as the executor, and they'd receive a certificate of qualification.
Right.
That would they would take to the insurance company and present that to allow them to know that indeed they are the executor. At that point, they'd be able to get details pertaining to the ownership.
Okay, okay. Michael, let's talk about policy beneficiaries. I'm an executor. We know that there's an insurance policy. How do I figure out who the beneficiaries are?
Well, it's often thought to be as simple as looking at the policy, but that's actually not always the case. A physical insurance policy will include a copy of the original application on which will be a list of beneficiaries. However, those are the beneficiaries at the time the policy was taken out. And as beneficiaries are in most cases revocable, there may have been many years, many life changes that have gone by. So really the most efficient way to find that information out, if you are qualified to act on behalf of the policy or the estate, is to contact the insurance company directly, get a current summary of benefits, or straight up ask who the beneficiaries are, and that will tell you up to date.
Okay, okay. Ken, let's talk about, we have an insurance policy, we know we own it, either as the executor owns it or the estate's the beneficiary. How do we go about making a claim on the policy?
Well, initially what will happen is that somebody will need to contact the insurance company, and quite frankly, anybody can contact the insurance company. Oftentimes they can actually do it online these days to let them know that the insured has passed away. Once they do that, they need to have the claim form completed properly. So the claim form would be sent out to the address on record with the insurance company and to the beneficiaries. It would be completed in the entirety. It needs to be completed properly, and then they would return that to the insurance company with a death certificate. Oftentimes a W-9 is needed to validate the Social Security number or tax identification number of the beneficiaries. And if the policy were in a trust, oftentimes the insurance company would also want to have a copy of that trust.
Okay, okay. Now, how long does it normally take to process a claim for insurance?
Well, that's somewhat of a loaded question, simply because the issue at hand here is for the executor or the beneficiaries to get all their paperwork together. But once that paperwork is together and with the insurance companies are pretty good. They'll turn it around typically within 7 to 10 days.
Okay, so that's not too bad.
It's not bad at all.
Okay. Well, Michael, we got a policy, we make a claim. Most claims are approved, but some claims are denied. So, what are some of the common reasons that a claim is denied?
You're right. I mean, life insurance is fairly unique in that it is one of the least subjective types of claims process that are out there. Unlike other insurances where someone's really making a decision on it, you are typically either deceased or you're not. So claims are typically approved, as Ken mentioned, fairly quickly. The exceptions to those rules are primarily found in the first 2 years after a contract is taken out, during a period called the contestability period.
Okay.
If a death were to occur during that time period, insurance companies have the right, and just in those first 2 years, to review the circumstances of death, the medical records, to determine whether a material misrepresentation was made on the application, something that, were it represented correctly, may have resulted in a different offer or no offer of insurance. And if that is the case, after an investigation, they can rescind the policy and deny the claim. Also, suicide is probably one of the most commonly known factors for having a claim be denied, but once again, only in the first 2 years after the policy is taken out. And finally, if a life insurance policy has lapsed for non-payment, that would be a reason, if a claim is subsequently filed, that it would not be paid.
Okay, well, that's good. That's all good to know. A lot of people have questions about whether or not life insurance is taxable. So I guess my first question, Ken, is are the insurance proceeds we receive on that life insurance policy income?
Well, life insurance is a tax privileged vehicle, and Section 101A of the Internal Revenue Code generally states that life insurance death benefits are income tax free, past income tax free to the beneficiaries.
Okay.
Essentially, that could go back to the days when they were trying to protect the widow or the widower, and in the event that the breadwinner had passed away, it would be probably not fair for the government to come and take a substantial part of that
Sure.
money that they need to live on going forward.
Okay. Yeah. How about someone passes away and we make a claim? Sometimes there's there could be 2, 3, 4 months before the policy is actually paid out. During that time, it might earn some interest a lot of times.
Yeah, indeed
is
it
that
will.
interest part taxable?
Yeah, indeed it will. So what happens is when the life insurance pays out, it'll generally be held with the insurance company, or it could be held with the insurance company for a period of time. And once that money has been paid out, if it earns any interest, particularly in this day and age with such low interest rates,
True.
The interest would be subject to taxation.
Okay. Now, we've talked about income taxes, but are the life insurance proceeds includable in the estate for estate tax reasons?
Indeed, that also could occur, because what happens is if an individual owns a life insurance policy, the deceased, and what would happen there is if they actually have a taxable estate, meaning that if they're an individual, if their estate is in excess of the exclusion amount of $5,450,000 today, or $10,900,000 for a married couple, yes, that indeed it would be inclusive in the estate. And there are ways to avoid having it included in the estates through something as simple as an irrevocable life insurance trust.
Okay. So we do need to understand, who owns the policy, because the ownership may actually determine whether, in fact, it is includable in the estate.
Absolutely.
So one of the things, if we have insurance that is includable in the estate, there are some tax forms that we will get. What is this Form 712?
Well, Form 712 is essentially just a valuation provided by the insurance company, and it's used to be filed with the estate tax return. A 712 is also used when there is a gift has taken place, or if one has transferred assets or gifted assets to another, and that would also need to be filled with the gift estate tax return.
So and the Form 712 we're referring to is IRS Form 712. And so the insurance company actually issues that. They send one to the recipient of the policy, and they send another one to the Internal Revenue Service. So
Correct.
They're both on notice about the fact that the proceeds have actually paid out. Well, Mike, we have an insurance proceeds policy that's going to pay out $1 million, okay, to the surviving spouse. It's not actually going to go through the estate, so she fills out all the paperwork. And it's processed by the insurance company. The insurance company then offers her the lump sum proceeds, but they also sometimes will offer her some other payout options. Can you talk a little bit about that?
Absolutely. The policies themselves, in fact, the bulk of the physical policy binder describes distribution options for the death benefit. And by far the most commonly accepted and a desired distribution option is lump sum, as many people believe the funds can be managed better on their side than by an insurance company. But there are situations, of course, where that isn't the case. In addition to lump sum, you can have the insurance company, much like a bank would, hold on to the money, pay interest, distribute the money in various ways. And depending on the situation, the age, the life expectancy of the individual or individuals who are the beneficiary, you can also have the funds paid out over an annuity basis or an installment basis, where the funds are paid out over a certain number of years, or also based on the person's life expectancy, so that they have a lifetime income from the policy.
Okay. Well, that's good. That's good to know. Well, Ken, are the proceeds of the insurance policy that are now being held by the insurance company, are they insured in some way? Are we protected in some way if something happens to that insurance company?
Well, there is protection that's provided by the states. States regulate insurance company, and they monitor the financial solvency of the insurance company. So what would happen is, in the event that a company were to default or become insolvent, The State Insurance Guarantee Association would step in, and what they would do is they would provide for protection of death benefits up to the amount of $300,000. Now, if it's a cash within the insurance company, such as a cash value policy, and there's cash internally, well, that would be up to $100,000. So there is protection, similar to the FDIC, which is federal for banks. It's states regulate insurance.
Okay, well, that's good to know. Well, I mean, we've talked about insurance and what happens when someone passes away, and as we've talked about that, you guys have mentioned some different ideas about things you could do to maybe make the situation better when it comes time to actually collect on that insurance policy. But let's talk about some planning options, prior to death, that people can do with these life insurance policies that they have. And I may ask you both to kind of go through a few of the ideas and things that you see that folks ought to at least consider. So, Mike, I'm going to start with you. Maybe start with a couple, and then we'll see what Ken has to say.
Absolutely. There are an increasing number of features that insurance policies have that it's good to really get to know, of course, at the time of purchase, but especially when you are planning ahead to make sure that your estate is able to be handled smoothly. Some of these have to do with accelerated death benefits. Life insurance policies, of course, pay a benefit upon death, but there are instances where access to those funds can be taken ahead of time. The most common of those being for terminal illness. And so, of course, before one were to become terminally ill, it's important to know that those options are there and make sure that they're well explained to those who might be handling their care or their finances at that point.
Okay.
Others include accelerated access for things a little further forward, like chronic illness, long-term care. There are policies nowadays that allow you to access the death benefit to pay for things that otherwise would come out of your own pocket. And organizing and making sure that everybody is aware of those can certainly help that process go a little bit smoother. I'd also say that you do want to make sure that you have the ownership of your policy squared away and taken care of. If it's not correct to begin with, or not advisable to begin with, if you own a policy when you really should have a trust own the policy, as Ken mentioned before, it is not too late to make those changes. Even if there are look-back periods, it certainly makes sense to get it in the right order well before the time comes.
Okay, Ken, how about yourself? Some other ideas you have?
Yeah, I would agree very much with what Michael just said on ownership, because life insurance is a contract, and if it is structured properly with the ownership, you can avoid the probate process. And it's a lot more simple than having to go through the probate process, obviously. So ownership is a big number one thing that I would say. And then also beneficiaries. You don't want to do things like list minors as beneficiaries. So above and beyond that, there's numerous other suggestions. But when we look to the ownership, that's certainly a big part of it. And for individuals who are preparing for their future, demise, that is what they'd probably want to do is make sure that they have a list of all their life insurance policies, advisors, and financial records accessible to the executor in the event of their death.
I think that you all made some really good points, but especially having some sort of a list so people know where to start from, so that you don't have to do that detective work, and try to find out whether a policy exists and where it is and who the beneficiaries are, or who the owners are. That if you can just have that compiled in some list that is accessible by your executors, that's greatly important.
And there are, in fact, companies that have products that are put out that help organize those things, more templated type of interfaces that are held securely until a authorized representative is able to document and show proof of death, at which point all of that paperwork, all of the instructions are right there for them as they need them.
Very good. Well, we have a little bit of time left now to begin to collect your final thoughts on the life insurance and how it fits into the probate process and things that we should do or maybe things we should avoid doing. in order to make things go as smoothly as possible for the loved ones who are going to be the recipients of that life insurance in many cases. So, Ken, I want to let you start some of your thoughts and final thoughts on this
Well,
topic.
if we're specifically talking about the executor, an executor really needs to know what they're in for. First and foremost, they serve as a fiduciary, and they represent the owner or the deceased, as a fiduciary, responsible, and for the beneficiaries, that is. They need to make sure that they take this job seriously, and there's a lot of people out there who could potentially help them to get through the probate process, such as a competent attorney, financial advisor, and or insurance agent. And they don't have to go it alone. So I would say leverage the professionals to assist you with getting through the probate process, because it can get messy, and it could certainly be a long process before you finalize the estate settlement.
Okay. Michael, how about yourself?
I would agree with what Ken said. I mean, there's no reason not to utilize other professionals, whether they're professionals that belong to the decedent or people that you are comfortable with. And most importantly, organization is key. It is not a simple process of just calling a phone number and getting a ball rolling in a turnkey process. You are dealing with many, many third parties, such as Department of Vital Records for death certificates or funeral homes for death certificates, dealing with insurance companies, multiple insurance companies in many cases, coordinating beneficiaries who are all wondering whether they're beneficiaries and when, in fact, they will receive their funds. It's important to make sure that everybody's kept on the same page. Organized communication, I think, is key. And, of course, follow up with those various parties to make sure that one party that may hold up the process for everybody else is not lingering behind.
I think those are all good suggestions. Certainly, we recommend that folks continue to check those ownership rules and beneficiary rules, and make sure that what they think is the case is in fact the case in the records of the insurance company, because it's not uncommon that those computer systems have glitches, and next thing you know, what you thought was the owner in one person's name or the beneficiary was a collection of people is something different entirely.
I've even seen beneficiaries whose names were truncated in computer systems for insurance companies, and nobody realizes it until somebody's looking for Ken Johns instead of Ken Johnson, and that can cause unnecessary delays. And good to vet those out ahead of time.
Absolutely, a very good idea, and to do that on a regular basis. Well, fellows, Ken, Michael, thank you so very much for taking the time to chat with us today, to share this important information, and really to provide a great public service to the folks in Northern Virginia. So on behalf of the Probate Nation, thank you very much.
Our pleasure. Thank you.
You're very welcome. Folks, without a doubt, probate can be complicated and confusing. As you navigate your way from the local probate office after being properly qualified and begin the process of identifying and marshaling the assets of the decedent, one of the common assets that you often have to deal with is life insurance. Determining if there is a policy, and if there is one, who is the owner or who are the beneficiaries of the policy, are initial questions that need to be resolved. Making a claim on the policy is relatively straightforward, but as we've learned today, claims can be denied. All this takes time for the insurance company to process, and once the claim is approved, it is important to put your tax hat on once again and understand that typically this is mostly a non-taxable event. An experienced life insurance agent often can help you get all of this done, but it does take time, and keep in mind that each life insurance company has their own claim procedure, so be patient as the process unfolds. This brings us to the conclusion of our show on dealing with life insurance. I hope it was informative, and remember that replays of the show can be viewed on the Probate Nation website. On behalf of myself and the Probate Nation, thank you for visiting with us.